Hey, thanks so much for joining back for part three when we're talking about tax preparing versus tax planning. Taxes are one of the pieces that we see that a lot of things happen when people go to retire because they have not planned on where their money is coming from. If you remember back to part one, which I'm linking now, you can go back and understand what I'm talking about, where the different places my money's coming from in that detailed spend down plan. So I can plan and prepare to figure out what is going to happen. Tax preparing is going to be set up for you where you just basically show up, you drop your stuff off every single year, and you just find out, am I owing money or getting money back? So whether it's TurboTax or with the CPA, you're looking at just dropping your stuff off and finding out what happened, just simply looking in the rearview mirror. But if you want to start controlling your tax, and you want to start finding out, are there things that I can do proactively to help this situation out? We want to look at tax planning. And tax planning is going to be proactive with your tax advisor. So CPA, your financial advisor in that circle as well, and even your attorney to find out what are the things that I can be doing. Do I have myself set up the right way? So maybe you have some rental property that you have income from or a different type of business. Maybe you're not taking advantage of all the deductions that you can get for your giving that you're doing. Mark Twain said the only difference between the tax man and the taxidermist is that the taxidermist leaves the skin. Well, sometimes it feels that way. It feels like that we keep paying more and more in taxes. Well, let's look forward as far as what's going on. During COVID, we had a lot of money that we printed out because we were trying to help a lot of people. So do we see that we're likely to significantly reduce our national spending in the upcoming years? Probably not. We have more and more governmental programs that have come online, and unfortunately, once we bring them online, it's very hard to kill them. They don't go away, so it continues to be an expense. And we just went through a huge debt ceiling stand down here as we're at the beginning of June of 2023. That luckily we made it through, but unfortunately, we didn't get a lot of accomplished other than just simply saying that we're going to increase how much we're willing to borrow, and we'll figure it out down the road of how we're going to pay for it. One of the ways that we pay for it is that we have more taxes from corporations. So is the economy slowing down or speeding up? Unfortunately, we see that we're not seeing that speeding up. We're not seeing a lot of new business created. We're seeing these taxes actually go down from a government standpoint as far as what's being paid in by corporations. And how can we maintain paying the interest on their national debt? We just voted about this. We said, you know what? We're willing to just extend how much more we're willing to borrow. And the same as your own personal situation. If you have a credit card and it has a limit to it, you've got to maintain paying at least the minimum. What happens if you don't do that as an individual? Eventually, they stop lending you money and they start calling saying, you need to pay us. You need to pay us. We're not going to extend any more credit to you. You need to pay us. What's happened as far as how much we've borrowed with this, as far as our actual debt that we've taken on? Well, if we look at even just in recent history, 2015, we were at $18 trillion of debt. 18 trillion. And now, just a few years later, 2022 at 31 trillion, and we're just voted to take on even more. So this debt has just went out of control. When we look at this, we have not tried to do anything to rein it in. In fact, we've just voted to say we won't change any of our spending habits. We'll just vote to take on more debt. Well, when a business or an individual spends more than it makes, Ronald Reagan says, it goes bankrupt. But when the government does it, it sends you the bill. The government sends the bill in the form of taxes. So don't be confused. Whether it comes in the form of taxes or comes in inflation, you are paying for the spending that they're doing. How are you paying? Well, for a majority of people, the number one place that they have money saved is in what's called a qualified account. This would be like a 401k, a 403b, with that, a TSP if you're a federal employee, all of these places where you've saved money and you've got a tax break when you put it away. So let's say that you were making $70,000 a year, you put 10% away. Well, it's like you made 10% less. So you're taxed on less of your income. But it's a handshake agreement that says in the future, when I pull money from this, I'll pay the tax then. The other unfortunate thing is those qualified accounts, when this was created, back in the late 70s, early 80s with 401ks, it limited with what your investment options are, because an employer, they can't open it up to offer you the entire stock market. They have to go through and pick 15, 20, 25 different investment options to allow you to be able to save for the future. And there's been a lot of lawsuits around this because the person that's going through to pick what's going to be there as available for you, maybe they didn't offer all of the options that you felt like should be there. So you can Google as far as 401k lawsuits, and you'll see this is just left and right here in recent history of lawsuits that have happened. Very, very few safe options. You might have a safe option of just being in cash, or a basic money market fund where you're earning very, very little interest with that. So there's not a lot of safe options. Most of this is putting your money at risk, where it can go up, which we like, but it can also go down, which we very rarely like. Another one of the things that comes up is how much of that money is actually my own. So let's say that you had $500,000 that was saved in your retirement account. Well, all of a sudden, if we go to pull that money out, not all of it is ours. Part of it is the IRS's in the form of taxes. So if you had that $500,000, you pulled it all out at once, then you're going to be paying a tax on there, $185,000 in this case, if you pulled it out all at once. And I've heard it before that somebody says, Andy, there's no way that I would pull it out all at once. But when we look at this, that tax situation gets even worse if we don't do it all at once, because when we spread it out and we have the growth that happens over 20, 30 years of retirement, we're paying more and more and more in taxes. So you have three options. I can either do nothing. I just continue to kick the can down the road, the same as the government's done, and say, you know what, I'll figure it out later. I'll just pay the taxes, whatever they might be, and hopefully they'll be lower than what they were while I was working. Well, we talked about that at the beginning, that we said, if we continue spending the way that we are, and we're not raising any extra funds through taxation of corporations, we're going to have to raise taxes. If I pay taxes right now at a known tax rate, I could go ahead and pay those taxes, and that way I don't have the unknown tax in the future. So I could save in different accounts that allow me to pay the tax now today, and then in the future, I don't have to worry about it. The third option is I can look for tax efficient options. What are places that I can not only save the money today, but I can hopefully get more benefit out of it long term? So what are some of those options? A Roth IRA, you probably have heard about this. Senator Roth enacted. The unfortunate thing is it's limited based upon your household income. So you can make too much to be able to contribute to a Roth IRA. Also, a Roth IRA, if we're contributing to that, you can't put that much away. So if we look at it on an annual basis versus your normal 401k, a lot less can be put back. You can convert regular traditional funds that you've saved to a Roth, depending upon the account type that it's in, but you're going to pay taxes. So it's going to count as ordinary income. If you are looking at trying to find ways that you can minimize your tax over your lifetime, that might be a very, very good tool. However, if you just do it and you don't put any thought into it or any strategy into it of trying to figure out how do I minimize the taxes that I'm paying by taking advantage of things that will help offset that, then you might pay a capital gains tax or ordinary income tax that is completely optional. Not optional in the sense that you just don't pay it, but optional in the sense that if you plan the right way, you can eliminate it. Now, you might also have access to a Roth inside of your 401k or TSP account, or even your 403b that's going to allow you to save, not get the tax break. You're going to actually count it as income today. But in the future, all the growth that happens in that account, you're going to be able to grab that money that you put in, plus all the growth, and it's all tax-free. Your employer's not going to match into that. They'll still match in the traditional part, but this is a way that we can help with all the different options that are available to start building some tax-free income. Other places that you can do this might be a flexible spending account if it's available for you, or a health savings account. And a lot of people will use these to be able to save because they get the tax break while they're putting the money into it. The growth is tax-free. It's not going to generate a tax bill on the growth. And in the future, if you use it for a qualified medical expense, you're able to pull the money out tax-free. So it's a triple whammy there, right? We're able to get three benefits with that when it comes to taxes. That's going to help you out long-term as well, because you can use this for things, for instance, like long-term healthcare, other healthcare benefits that maybe if you retired early, maybe you're retiring at 62 and you need to pay for healthcare expenses from 62 until 65 when you reach Medicare age. If you're worried about saving for the future for education for your kids, so 529 accounts, Coverdell accounts are going to allow you to be able to save and help out tax-wise. Also, municipal bonds. And the last piece, PLI, and you might be sitting there going, what is PLI? It's permanent life insurance. Now, there is good versions of this and there are very bad versions. A bad version is going to be designed to make a large check for the advisor or the insurance person that's selling it to you, but not give you a lot of benefit. So you got to make sure these are designed properly to actually produce the benefit. We want to minimize how much coverage you have to the lowest legally possible per the IRS, to then build up as much as we possibly can of cash value inside of this contract that I can borrow from. When I borrow from the account, the same as if I borrowed from a bank to go get a car, the loan that I'm taking is not taxable. It's not taxable because it's a loan. And I can choose to pay it back or just maintain the interest or do neither of those and continue to increase how much is there. But that's a way that we can look at this, of building some tax-free income for the future. All of these are designed to be able to help you out with figuring out, how can I take control of my tax situation? Taxes should not be something that's just left to chance. When we go through our financial pathway process, this is something that we design in there to actually look at your tax plan and to see what you're doing right now, of how much of your money is taxable, what is going to be your cumulative tax problem over your lifetime, and is there anything that you can do about it? What are some options that I have of places that I can save to build tax-free money for the future? So if you're wanting to take advantage of that, of looking at whether it's a detailed income plan, your Social Security analysis, trying to figure out what risk you're taking on in your portfolio, or even just trying to look at this and find out, what is the tax problem that I have? Is there anything that I can do about it? Click the link below so that you can schedule a time, and we will develop and have all three of those parts, or just one of those parts, for your own individual situation. And then you can make educated choices of, do you want to do anything different? I call it a financial pathway analysis. So if we look at this from all of these perspectives and we do a financial pathway analysis for you, there's nothing that you can buy. There's nothing that you can buy. There's nothing that we're selling in that time together. We're going to meet where you're comfortable. For most people, it's virtually, but I do in-person appointments here in the kind of the Northeast Tennessee, Southwestern Virginia area. But if that's something that is concerning you and you're trying to figure out what's going on, you want to meet in person, we can arrange that. Virtually, for most people, works with that. And you're going to know exactly what are the next steps that you should take, if any. Take advantage of this. When we see that people put it off, when we have our workshops in person, sometimes people do put it off. They say, thanks for the information. That was very, very helpful. But when we look at this to decide, are you going to do anything about it? They say, you know what, I am, but I'll get back with you later. The problem with later is that things happen and things spin out of control that you aren't able to take advantage of. I like to keep a garden. Unfortunately, last year, I kept saying, I'm going to get up there and I'm going to weed the garden. And that just kept getting worse and worse until now, 2-3 weeks later, I finally got up to the garden. I was going to have time to weed it. And now, instead of a quick task that might have taken an hour to weed the entire garden, it was a full day of sweat, of going through and trying to get the garden weeded. If only I'd just taken a little bit of time earlier, I could have made choices. I could have got things in order to where I didn't have such a hard road ahead of me by putting it off. You're in the same situation. You can choose right now, today, to do something different to improve your situation. I'm not saying that we need to work together. I'm not saying that I can help you. I'm simply saying, take advantage of this analysis so that we can go through and look at your own individual picture. You can click the link below so that we can help you out with your own situation. I appreciate your time, and if you enjoyed this, share it with others.